Hi, I'm Ryan, the frugal analyst, and I've been bidding on houses and I kept losing against someone bidding $100,000 over asking. The market is crazy, but I still think investing in residential real estate is an excellent way to hedge against inflation and a solid long term investment. So, how can we get exposure to residential real estate without buying a house? The easiest way is to use real estate investment trusts or REITs that we can buy from our brokerage accounts where the company owns actual real estate, but most of them, like the vanguards of the world, only have a small exposure to residential real estate. So in this video, I'm going to go over some of the biggest residential real estate investment trusts, which one to choose, and explain how they differ from buying a home as an investment. Residential REITs are investing in companies that buy and rent real estate. If real estate prices go up, rent increases and ultimately increase the value of the REITs. There are three factors I look to evaluate residential REITs. One is location. Different location will have different population growth and rental trends. Different REITs will focus on different geographic areas. Some focus on coastal cities, some focus on the Sunbelt states, and some have properties all over the state. Second is the type of housing. There are single family homes with larger spaces. There are apartments with hundreds of units in one location. You can even invest in manufactured homes that are relatively cheap compared to a house per square footage. Apartments might be managed more efficiently as they are clumped together in one area. Single family homes might have a better value appreciation with people working from home. It really depends on your bias and what you believe will appreciate better in the long term. Third is size and diversification. Larger REITs will give more diversification and potentially more efficient operations, while smaller REITs allow us to bet on a specific location that may have a higher upside. In general, most publicly traded REITs are big enough that your investment is already going to be diversified. Allocation wise, we still want to hedge against potential black swan event in a company, so it is wise to buy multiple REITs at a time. Plus, it is free to trade on most brokerage platforms, so there is no harm in purchasing more than one REIT. So let's look at some of the biggest residential REITs. I got the REIT name, the stock ticker, market cap, property type, and locations. You can see that most of the REITs are apartments followed by single family homes and manufactured homes. The list is ordered by the largest market cap and they all own and rent properties in multiple states. All of these REITs are 100% or close to 100% focused on residential real estate. Next, let's talk about returns. Will investing in REITs give the same return as buying a home? To check, I compared the REIT stock price to the S&P Shiller Home Price Index. This is the index that a lot of economists use to measure the price of housing across the US. Looking at the last 5 years, I indexed AMH and EQR stock price with dividends reinvested and see how much they appreciate compared to the Case-Shiller Housing Index. At a high level, these REITs are more volatile. It may overshoot or undershoot compared to the home index. It's not a pure apples to apples comparison because of the different geographic distribution and operational risks. In addition, we are looking at the stock price, which can fluctuate every day based on news, supply and demand, and everything else. Still, in general, they should represent the same thing, the actual real estate value that they hold. Next, let's list out all the advantage and disadvantage of investing in residential REITs versus buying a home for investment. Looking at advantage, REITs are a true passive investments. There's no repairs or finding tenants, just buy and hold will give you the market return. The next advantage is diversification. Buying a REIT will diversify your investment to multiple locations and hundreds of units compared to buying a single property. There's also no transaction fees. All the buying and selling of the REITs is usually free from your brokerage accounts. Buying and selling a house costs around 4 to 6% in agent fees. There's no agent fee in purchasing a home, but it is priced into the sale of the house. REITs are also a liquid investment. You can buy and sell at any time, just like if you were trading a stock. This gives you the option to participate in real estate price moves very easily. One case here might be if you want to buy a home but didn't find the right property, you can temporarily invest in REITs to gain market exposure, and when you need to put down the down payment to buy a house, you can liquidate your investment quickly and transfer your money out for the house. Now let's look at some disadvantages. First, it's not a tangible property. You can't live in it and make it your home. It's an indirect investment and you are holding paper assets. Next is the stock price. The stock price may be volatile. and inefficient. Just like buying a stock, the price is determined by supply and demand, and it may not reflect the actual value at a given time. Last but not least is leverage. So let's talk about leverage. If you buy a house at 100,000, you can put 20% down. If the house appreciates 10% from 100,000 to 110,000 with 20% down, you will make 50% leverage return because you only put $20 and gain $10,000. There are other fees like tax, interest payments, Miller's, repairs to add in, but in general, leverage makes buying a house worth it due to the low mortgage interest rates. Buying REITs have a much lower leverage ratio. They do have some leverage, and you can see it in the balance sheet under liabilities for how much loan they have, but the ratios are much less than buying a house with a mortgage. So that's the difference between buying residential REIT and buying a house for investment. After this research, I will put more of my savings into Invitation Homes and America's Home for Rent because I think work from home is here to stay and more people will want a bigger place. It can be a good hedge against inflation, and the exposure to the Sunbelt real estate market is attractive compared to coastal cities where real estate price is relatively high. As a bonus tip, if you're looking to buy houses, looking at these REIT stock prices may give an earlier indication of where the real estate market is going. I appreciate you watching, and I'll see you in the next Frugal videos.